there are three main components of our economy: mortgage rates, unemployment, and oil prices. I know that we talk about that a lot right here on Financial Focus. And Larry Cantrell joins me now from Cadence Bank to revisit those three subjects because they're very important to our economy.
I think exactly. Everyone's kind of talking about why is the economy bouncing around so much. We want to talk about that, but let's go back and visit the mortgage rates. We know the mortgage rate's right up about 5.05%. Now that's a little bit up for what it's been in the past few months. However, here's something to keep in mind. We know that $1.25 trillion is being put into this thing by the Federal Reserve, and that push to purchase these mortgages is going to end at the end of March. So look out for those rates. They're probably going to start going up a little bit. And in oil, what's happening with oil, it's kind of bounced between the $70 and $80 a barrel. And everything seems to be so sensitive. So what's going to happen with that? We're just going to keep an eye on that. But we know it's dropped just a little bit. And another thing we normally find out is when those oil prices drop, it's connected to unemployment. And we know that first time unemployment insurance people apply, it's up 22,000. They were expecting that to go down. It's up like 496,000. So that's a little high this time.
You were talking about those three things being very sensitive right now, but that's not the only thing that is extremely sensitive. The stock market, the jitters there. Let's talk about that again.
Probably, if some way to make it make sense, the stock market right now is like the worst sunburn you've ever had on your shoulders. Anything in the world that touches it seems to affect it just exponentially almost. And so right now the thing that we're finding is so much of what's going on public policy-wise is seeming to affect it. Here's some quotes. It's almost impossible to say where the market's going in the short term. We've talked about that before. And other policymakers worldwide have forced market players to become political scientists because there's so much about what is our president doing. Now then, let me go back to something you folks asked me about, some people asked me on the street about. We mentioned the European Union last time and that it had some effect in Greece. What in the world is the European Union? If I could draw a parallel, it's a parallel between basically our 13 colonies at one time. How they joined together and had some common things. The European Union, it's about 55 million people involved. There's 27 different states over there. They call them states. They joined together so they could have a common denominator for capital, for people, for services, and particularly, I'm going to say for capital. And then there comes the euro dollar, so they have a common denominator, just like our American dollar. Now, why is that important? Because Greece, the sovereignty of Greece, we know their loans were having some problems. And so the European Union, as was saying before, we think we're going to come in, we're going to make sure Greece is taken care of. Well, if that happens, it ripples through the stock market all the way over here to Main Street. Why is it affecting Main Street in Columbus? Because folks in Columbus own stock, and those stocks are going up and down, okay?
So there's the connector between the Main Street in Greece and the Main Street right here in America.
Exactly. And over there now, they're having trouble with Portugal and Spain, a lot of concern, very sensitive with, then again, all the policymakers over here. So we just got to watch our stock market. It's jittery, okay?
All right. And that's it for this week's Financial Focus. We got a last look coming up right after this short break.